Welcome to the Stock Market Daily News podcast for Friday, May 10th, 2026. I'm here to break down Thursday's market action, highlight the top movers, and set you up for the day ahead. The S&P 500 finished up a modest 0.3%, while the Dow Jones was nearly flat, and the Nasdaq gained just over 0.4%, buoyed by continued strength in tech names. But under the surface, investors are starting to debate whether the big winners can keep running. Today, we're zooming in on the simmering debate around NVIDIA, a warning from the Federal Reserve, updates from major gig economy players like Uber and DoorDash, and rule changes from India's market regulator, SEBI. Let's jump in. First up, NVIDIA's meteoric run has some investors asking, is the party almost over? On CNBC's Fast Money, the panel took a hard look at NVIDIA's stock, now up over 80% in just a year, and a stunning 1,300% over 5 years. Shares traded around $215 Thursday morning. The bull case? Unmatched AI tech and what some see as not an expensive multiple, with a forward price-to-earnings ratio of 24. But skeptics point out a disconnect between NVIDIA's ambitious growth guidance and more cautious forecasts for AI infrastructure spending. Competition is also heating up, with AMD shares jumping 94% year-to-date. The key takeaway: the AI trade may be shifting from pure GPU plays to the broader picks and shovels ecosystem, such as Corning, which is up over 300% on optical demand. Next, the Federal Reserve's latest financial stability report sounds a note of caution for investors. While U.S. banks remain well-capitalized and households look relatively healthy, the Fed warns that asset prices across stocks, bonds, and real estate are elevated. The equity risk premium, a measure of compensation for stock risk, is at a two-decade low. Private credit and non-bank leverage are flagged as the biggest vulnerabilities, with more stress bubbling under the surface than headline default rates reveal. For investors, that means market corrections could hit harder if optimism fades or if geopolitical or economic shocks arrive unexpectedly. Switching gears, let's talk gig economy stocks. Uber, DoorDash, and Instacart all posted earnings that beat expectations, rallying on the backs of high-earning consumers who keep spending on convenience, even as others tighten their belts. For example, Uber reported about 50 million members in its Uber One program, who now account for half of bookings. DoorDash saw membership growth as well. The strategy: target well-off customers with premium services like Uber Black and the new Uber Elite offering, while also serving price-focused users with value options. For investors, these companies are showing they can diversify revenue and capture multiple slices of demand, cushioning them from economic swings. Looking to India, SEBI, the country's stock market regulator, just announced new rules to curb real-time misuse of exchange data. Starting July 1st, all market price data shared for investor education must have a 30-day delay, with exceptions only for certain official institutes. This move could dampen opportunities for real-time trading strategies that rely on up-to-the-minute educational content, shifting the edge back to professional and institutional investors. And finally, Tandem Diabetes Care delivered record first-quarter shipments, shipping 29,000 insulin pumps globally and posting sales of $247 million. The company reaffirmed its guidance for full-year sales of over $1 billion. With improved margins and new product launches, including pharmacy channel access and expanded compatibility for insulin delivery, the stock is in focus for healthcare investors, despite minor headwinds from supply chain issues. To recap, the S&P 500 and Nasdaq drifted higher, but signs of froth persist, especially in tech and credit. Investors are increasingly debating how long the current tech rally can last, with big names like NVIDIA and AMD at the center. Gig economy platforms are riding a wave of high-income demand, and regulatory changes in India highlight how investor dynamics can shift globally. Looking ahead, watch for fresh earnings from major retailers next week and keep a close eye on upcoming inflation data for the Fed's next moves. That's it for today's Stock Market Daily News. Remember to subscribe for your 2-minute market roundup every trading day. Thanks for listening and stay informed.